All right, let's look at income taxes. In particular, we're looking at federal income taxes. State income taxes tend to either be a consistent percentage, just a flat percent, or they will work in a similar fashion to this. So it's either very similar process or an easier process to this. So there are a few different ways that you can file. You can file as a single person. You can file as a married person separately. You can file as a married person jointly. You can file as a head of household. So there's a few different ways that you can file, but we're going to look at two different versions, probably two of the more common ones, which would be single filers and married filing jointly, which is right below here. So I'm giving us an example of what a tax bracket looks like. So these are the 2020 tax brackets. So a lot of times what you will hear people quote is just their tax rate. And they'll say, you know, I'm in the 32% bracket, I'm in the 22% bracket, whatever. Usually you won't hear people say it actually if they're in 22. They'll complain about it if they're in like 32, 35, 37. Okay, but it's important to note these are sort of just nominal brackets. You don't actually pay these percentages unless you were in the very lowest one, in which case you do pay exactly 10%. But everybody else beyond that doesn't pay the percent that it says, and we're going to address that. So that's the part over here. What's your actual tax owed? So your tax owed, your tax rate is all based on what your income is, your taxable income. So not everything that you make is going to be taxed. So let's say you make $50,000 a year, your taxable income is not going to be $50,000. It will be less. Let's say you make $200,000 a year. Okay, it's not going to be $200,000. It will be less. So whatever your taxable income is, that tells you which tax rate you're at. Again, just a nominal bracket. So how do we find the tax owed? Well, the first one's going to be pretty easy. It's just 10%. You're in the 10% bracket, you pay 10%. Fine. However, after that, basically what happens is we treat everyone's first $9,875 the same. Everybody. Doesn't matter how much you make. You could be Jeff Bezos making, billions of dollars. His first $9,875 are only taxed at 10%. Okay. Then the money beyond that, any money made in the next stretch is going to be taxed at 12%, which is why saying that you're in the 12% bracket doesn't actually mean you pay 12% of your total. Okay. So you pay basically however much you would pay, 10% of the last bracket plus 12% of how much you're now into the new bracket. So that's how each of these works. They basically say everybody's first this much gets taxed the same. Anything beyond that, up to $40,125 gets taxed the same as 12%. Anything beyond that gets taxed at 22%, up to $85,525, and so on. So it's a little bit of a complicated system, but lucky for you, I was so nice and I put all of this stuff together and I created another template for us, right? And the same type of idea works for married filing jointly. This means that you and your spouse file together. Notice that these brackets are much higher because you're putting two people's incomes together. So 19,750 is, conveniently, twice the value up here. So you just double these values and then the percentages kind of go along with them. Okay, typically it is to your benefit to file jointly if you're married, but not always, but typically it is. Okay, so let's get down to some elements here. So we talked about, right, taxable income is different from actual income. If they were the same, then everyone would pay taxes. But of course we know some people are mighty clever and get around that. Good for them. All right, tax rates applied are applied to taxable income, which is just however much of your income taxes will actually be taken out of or referred to. So therefore, the percentages we have are called marginal rates, again, because they don't apply to your entire income, but also even of your taxable income, we don't apply that rate to all of it. So we're going to look at a couple examples. Suppose we're filing as married, filing jointly. And we have $92,000 total in taxable income. How much do you pay in taxes? Okay, Well, let's pull up our taxes template here, and I put those items, the overall, single and married filing jointly brackets in here just for reference, but you don't actually need those. It's just good to kind of know what's happening to kind of reference them. So the other thing I wanted to mention, let me just pull this down a little bit, is this formula up here, which isn't even all of it. I'll scroll down, right? This is what I had to input. So just kind of keep that in mind, that the templates are here to help you out, so you don't have to do all of this stuff, right? Okay. Anyway, same thing with the marginal tax bracket, big set of if-then statements. Okay, so our total income here was 92,000. Whoops, not 920. I wish. In this case, we are not seeing anything about deductions. So I'm going to say, okay, 0. And in fact, right, this says is your taxable income. So it's not even your gross income. Gross just means your total, your overall before accounting for deductions. So no deductions added. So your taxable income should be here, 92,000. What is your filing status? If you click on this, you see a little arrow. So this is going to say select single filer or married filing jointly, which is what we have in our case. Okay. We see that updates here what's going on. So if I change this, if I say, okay, single filer, all of these numbers change. We're in a different bracket, a different number here, right? So filing jointly, we are in the 22% marginal bracket. Our taxes owed are 11,820. So that's going to be the answer to this one. How much do you pay? 11,820 in federal taxes. Now the question is, or the thing I'd like to refer to is, well, hold on a second. We were supposed to be in the 22% bracket. How much did we actually pay? Well, our real tax rate relative to our taxable income here, 12.8%. So all that belly aching about, oh, I'm in the 35% bracket, I'm in this bracket, let's just slow our rolls a little bit here. That's never actually the amount you pay. So everybody just needs to calm down and learn themselves a little bit of math here. In this case, relative to the gross, well, it turns out we don't actually know the gross, right? We just kind of accounted for the fact that, yeah, we don't know what we started with. So if we have a gross amount and then account for our deductions, these two numbers will be different, but in this case, they're the same. Okay, suppose Jada, who's going to file her taxes as single, has a gross income of 212,000. So let's start with that. So 212,000. She's filing as single, right? So before deductions, it looks like she's going to be in the 35% bracket, but okay. She's got a taxable income of 175. So there's a couple ways that we can address this because we were not told about deductions here. And so taxable income is this amount. Now, the thing we could do is we could just say, well, if I don't know exactly what her deductions are, I can just change this to 175 so that I see taxable income. This is really the one that matters, is what do I see for taxable income? And then this information is going to be correct. The other thing I could do is start with her 212, and I could think off to the side, okay, if she had a gross of this and a taxable income of this, I could just subtract them. So I guess she must have taken 37,000 in deductions, and that would get us to the 175. Either way, it doesn't really matter, right? So in this particular case, it doesn't matter. It doesn't affect us. So how much would she pay in taxes? That would just be our $37,016. And usually for federal taxes, even if there is some sort of number of pennies or something on there, typically they'll just have you round to the nearest dollar. So something to keep in mind. Okay, she was in the 32% bracket. How much did she actually pay? Well, relative to her taxable income, she only paid 21.2%. Relative to her gross, and this is what most people think about, is like, oh, what's my salary, right? My salary in this case, hers was 212,000. She only paid 17.5%, but basically half of what the marginal tax bracket said she would. So Again, let's all calm down when we're talking about what percent rate we're paying. All right. Deductions. Let's get into some deductions. So a lot of times people will just take the standard deduction. So this is an amount that you can subtract from your gross income, your total income, to basically lower your taxable income. You can also itemize. So if you're someone who has your own business or something along those lines, and itemizing all of your different deductions, things like, cost of, I don't know, a new computer and various other things that you can put down, if that comes out to be a larger number than the standard deduction, then sure, you can itemize. But a lot of times folks will just itemize, and these are the amounts that we have in here for itemization. Okay. Suppose Kayla, who will file her taxes as single, has a gross income of $55,000 but has $14,500 in itemized deductions. So we'll go back here. We'll say $55,000. She has $14,500 in itemized deductions, which means her taxable income is just the gross minus the deductions, right? And we want to know how much she's going to pay in taxes. Well, she's going to pay $4,700. Right, she's in the 22% bracket, but she only ends up paying about a third of that, 8.5% in reality, relative to the gross. So again, not too bad. All right, so we kind of see how these questions go. I've been mentioning this common misconception a lot. Probably you've heard a relative or politician say this kind of thing about being penalized for making more money. That's just not true. That's a big old bunch of garbage. So, come back at them with a little bit of mathematical factuals, all right? So, all right, let's take a look at another example here. So we've got, we're filing our taxes as single filer. You've got $92,000 in taxable income. So we're going to go over here, $92,000. We're going to say we have no deductions. If we're saying, again, if it's $92,000 in taxable income, we're just going to say that's our gross and account for zero deductions. Of course, I mean, you could start with whatever you want here. We just need this taxable income to come down to $92,000. That's the most important thing. Okay, single filer, fine. So we've got all of our pieces there. So which marginal tax bracket are you in? How much do you pay? Well, which marginal tax bracket? We are in the 24% bracket. We pay $16,160. So 24%, $16,160. What percent of your taxable income do you pay in taxes? So we would think it's 24%, but of course that's not actually true. So what percent of our taxable income, right? So this is relative to taxable, relative to gross. Make sure we're choosing the right one here. In this case, because we don't have any breakdown of the gross versus deduction, these two numbers are the same, but in general they're different. So 17.6%.